Okay, well,
Okay, shall we start? I hope everyone can hear me. So, we are now officially starting the Wight Pension Fund Committee. And there are a few pre-live instructions to go through before we actually start. Probably all heard these before, but I will go through it. The pre-live. All microphones should be muted unless you are asked to speak by the chairman. This is to reduce background noise and feedback. But if you do wish to speak, please let the chairman know by using the chat bar. Members of the committee should have their cameras on at all times and apply an appropriate background, if you've got that. But all other participants should keep their cameras off, please. This is to reduce the pressure on the network. If the chairman invites you to speak, make sure that your camera and microphone are switched on. I'll start to move around a bit now. Be reminded that the image being broadcast live will be surrounded by a red box. We do have a quorum this morning, and I have mentioned to Vanessa, in case of nuclear attack or something similar, and she's the vice chairman. If Newport is destroyed, then she will take over. Can I remind you all, we can look live on public? Yeah. Yes, I remind you all that this is able to be viewed by members of the public. So watch your language, please, Paul, and we'll see how we get on.
Adrian, could you speak a little louder?
Right, so now we will just check who is here. As chairman, I'm Adrian Axel, you all know me, and I would welcome all of you here today, and in particular, Debbie Andre, who I can't see at the moment, but I understand she's somewhere in the list. Oh, there she is. There you are. Hello, Debbie. Welcome to the committee. It's your first meeting with us. I'm very pleased that you've joined us. Some people, for some reason, don't think this is a very important committee, so nobody wants to come on. But I would remind you, or remind everybody, that we are responsible for assets of the pension fund up to £600 million. It's a lot of money in anybody's view. And also that we have 15,000 members of the pension fund, that is current employees and ex-employees, and 15,000 is equivalent to about 10% of the island's population. We just think of it in terms of who is affected by it on the Isle of Wight. I'm going to speak louder, she says. Can you all hear me now? Right. We have a number of officers and board members and external representatives also in attendance. Can I ask, Megan, are you going to take the roll call now for attendance?
yes, I can do, Chairman. So we have Councillor Axford, Councillor Abraham. Nodding. Councillor Andre. Present. Councillor Brading.
Yeah, present.
Councillor Churchman. Waved. Councillor Garrett.
Present.
And Councillor Perks has given his apologies.
Steve Milford, or your representative?
Yeah, I'm present, but as a union rep.
Thank you. Can I especially welcome Emma Garrett, our investment consultant from Highlands, who hasn't come a long way today. You're still in Glasgow, I guess. But thank you for joining us. Makes your trip a lot easier, I guess. Right. Housekeeping. There is new legislation in place that allows meetings to be held remotely by whichever means are available to a local authority. Mobile phones should be switched off unless they are being used for the meeting. And all participants should be reminded to allow for slight pause prior to speaking, acknowledging to catch up and display correctly. Please only speak when I ask you to do so, and you attract my attention by using the chat function. And remember to turn your microphone and your video on before you speak. We will now move to the agenda. Everybody's happy? First item on the agenda is to confirm the minutes of the meetings held on the 13th of March. I will say during the meeting there are many items where we have to note something in which case I will just ask whether anybody has some objections, but we won't take a formal vote. There are a couple of items where we do have to have a vote, in which case the clerk will take a roll call and answer individual votes. And I believe that the minutes is one of those. So I'll ask Megan if she would do a roll call, please. Obviously, if you weren't here last time, you will abstain.
Councillor Brady would like to speak on the minute.
Okay. Do you want to speak before we do the minutes? Or?
I'd just like to propose an amendment to an addition to the minutes, if I can, please. I'd just like my apology to be noted for the last meeting as I was in hospital. So I did give my apologies. I'd like that noted. Thank you.
Do that.
Thank you.
Is that okay, Megan?
Yep, that's fine.
Okay then. So can we take through the roll call, please, as to everybody who agrees with the minutes of the last meeting being correct?
Yes, Councillor Abraham. Councillor Andre.
Abstain as I wasn't at the meeting.
If you're not there, you abstain, Barry.
Councillor Brady.
Yeah, I need to abstain as well, obviously, because I wasn't there.
Councillor Churchman.
4.
Councillor Garrett.
Abstain, I wasn't present.
And Councillor Axford.
Yes. Happy? That's the majority. Thank you very much, everybody. Over there. Right, I'll read this. Although I have no issues have been raised with me or the officers in advance of the meeting. Members, can you please advise me if there are any issues with the minutes from the last meeting? We've had Paul's comment. Anybody else happy with them? Right. I haven't had apologies yet.
No, we have had apologies from Councillor Perks.
Apologies from Councillor Perks, who has just been appointed to the committee after the recent reshuffle. Paul, you've got your hand up.
Apologies from Councillor Mosdale. She's on an integrated care partnership meeting.
Okay, we're not quite sure after the recent reshuffle whether Claire is a member of the committee anymore, because we haven't had an official notification one way or the other. The ruling has to come off. Don't all rush, please. Right, thank you for that. Right, item 2, declarations of interest. Are there any declarations of interest? None received. Anybody want to declare interest now? In which case we'll move on to item 3, public question time. Members of the public were invited to submit questions in writing prior to the meeting, but no questions have been received.
No questions.
Thank you. Item 4, just started talking about the membership changes. So I will ask our clerk, Megan, to lead on this, please.
Yeah, hopefully everyone can hear me. Members will be aware, full council on Wednesday the 15th of July, members accepted the revised calculations determining the number of committee seats and agreed to appoint these on a politically proportionate basis. The key changes to note are that Councillor Andre has now joined the committee and is filling a vacancy previously held by the Island Independent Group. Councillor Perks has joined the committee and is filling a newly allocated seat as an ungrouped member. And the Conservative Group have lost one seat, and we're still awaiting confirmation on who will be permanently stepping down from the committee. Chairman.
Thank you for that, Megan. I'm sorry if I stole your thunder on some of those points.
That's quite right.
Better to hear it twice than not at all, I would say.
Speak to
So,
Christine.
yes, that was the full committee detail. But also, you will note Christine Shaw from Island Roads isn't here, and Joe will fill you in on that.
Thank you, Chairman. Christine Shaw has been made redundant from her role at Island Roads. As such, she is no longer eligible to stand on the pension fund committee as employer representative. Christine had been on the committee since 2014 and has done a very good job in representing employers' views within the committee. We now have to follow a process to appoint a new employer representative to the committee. And what we're going to do is follow the process that we followed in 2014. A role profile for the employer has been the section by one officer. We propose to send that out to all employers within the fund and ask them to express interest in the role. If more than one nomination, then we will do a selection process from within the other employers. Given the fact that it's summer holiday and a lot of our employers are going to not get an appointment over the summer period, so an expression of interest form early September with anticipation that the new employer representative will be from the October committee meeting. If members could just note that process, or happy to take any questions.
No questions on that? Okay, thank you, Joe. Can I just mention we did have some background noise during that item. Can you please just check that your microphones are turned off? Okay, thank you. Right, so now we move on to agenda item 5, which is the update since the last meeting. A lot of things have been going on, and we're going to have an update on pension fund activity from our technical finance manager, Joe Thistlewood. And we also have the pensions manager, Matt Collier, who is in attendance to answer any detailed questions around administration activity. Joe.
Thank you, Adrian. Members will have read the paper, I assume, that was presented, basically setting out everything that has happened or not happened in the period since we last met in March. We have tried to maintain as much business as usual as possible, although resources have been diverted onto COVID-19 responses, particularly by myself. We haven't missed any statutory deadlines in terms of governance or administration in the period. However, some of the communications that would have been circulated previously with analysis from myself before they were sent out have either been sent out just blank with no analysis, or not been sent out at all, for which I apologise. Members, thank you very much for your participation in the National Knowledge Assessment from Hymans Robertson. I have now received the results of that, but haven't yet had a chance to digest them and present them. My anticipation is they will come to either the September or the October meeting of this committee. In terms of administration, the key priorities have been focused on the payment of member benefits and dealing with those members who are recently retired or have lost a loved one during this period. Members will note from the Appendix 2A and B to this report that the fund has not experienced a significant increase in deaths, retirements or transfers out during this pandemic period when compared to last year. We were quite lucky in that respect. We've also confirmed that no employers have approached the fund for any deferral of their contributions during this period. In terms of employer compliance, I've presented Appendices 3A and 3B, which show that the only delays in receipt of contribution or membership data during this period have primarily arisen from those employers who send us information by post rather than through electronic means. As the administration team have not been working in council offices, it's very difficult to process post when you're not at a desk. We have mentioned to those employers to ask them to try and use electronic methods, and we keep on top of that as best we can. In terms of investments, it has been a very volatile time in terms of markets. We lost quite a significant investment value at year end, but that seems to have bounced back at this current time. We will be talking more about investments in more detail later on in the meeting with Emma from Hymans Robertson. Other than that, I don't think there's anything specific I need to add, but I'm happy to take any questions from members at this point.
Are there any questions, please, on the paper? Harry, over to you. Can you put your microphone on, please?
Yeah, it just goes back to something that Joe said earlier about receiving through post rather than electronically. We not just make that you have to do it via the emails rather than paper. Just say we won't accept paper anymore. Just certainly, I have to deal with DEFRA quite regularly, and they won't accept anything other than electronic now.
Okay. Thank you, Councillor Abraham. I'll work with Matthew and the administration team to send out communications to that effect that we will no longer be accepting paper contributions and cheque payments. I think we've tried doing that, but we will do it again. Steve Milford had some questions.
Steve, do you have a question?
Couple if I may, Chair. Thank you. Firstly, just on the other employers contacting us to say they would have any difficulties, it's a shame the question wasn't the other way around, that we could get a positive response from them to say they don't have any problems rather than that we haven't heard from them. But I guess what Joe's saying is that they're paying over, so we're hoping that they are all okay. I was also pleased to see that the pension benefit quotes and the other work the pensions admin team do is still going on ahead unaffected, although obviously we do have quite small numbers involved at the moment in terms of queries, but we're pleased to note that that they do seem to be able to service members' queries working under the new arrangements. And just one comment on Barry's comment there in terms of paper. Personally, I would find it very difficult to read a sort of 30-40 page document online and take part in a meeting, so I think sometimes paper copy is helpful if you're trying to refer to it at a meeting like this.
I think, Steve, thank you very much. In terms of the paper, I think Barry's point was that employers shouldn't be sending data submissions and cheque payments through. So paper copies of meeting papers, absolutely, but in terms of correspondence with the pension fund from employers, we will try to process as much electronically as possible.
And as far as, if I can just go back to the point about other employers who are part of the scheme have not had financial difficulties in the sense that they got asked not to send their contributions in. I think some local government pension schemes around the country where they got quite large, maybe it's a group of councils or some other large employers, some of their subsidiaries, let's call it, have asked for deferral of paying the dues in. But perhaps we're fortunate on the island that most of we do cover, as you've seen in the paperwork, about 20 different organisations who do their pensions through us. It's really only the college which is of any size. Okay. We've been asked to note the contents of this report. If anybody else has got any questions, can I ask, if you are not content to note it, can you show in some way, either through chat or by putting your hand up? If not, we will note this. Vanessa, you've got your hand up. Is that because you're happy or you're not happy?
Sorry, I put it up too soon. I'm quite happy, thank you.
Okay, in that case, we will note that item and pass on to the next item on the agenda. So now we're on item 6, which is the annual report and accounts for the year up to March 2020.
Thank you, Chairman. That's me again. This is the draft financial results for the financial year ended 31st of March 2020. We've presented a summary balance sheet and income and expenditure account and an analytical review in appendix on page C2, which sets out basically changes between last year's results and this year's results. The key change I will have to point out is in terms of investment market values. which, as we've mentioned previously, due to the fluctuation of markets in terms of COVID-19 valuations. Page C4 sets out the number of employers that we have within the fund and the number of members that they have. We don't propose going through this in any great detail at this time, but I'm very happy to take any questions should any members have them at this point.
Sorry, Joe, I don't believe I already mentioned it, but the deadline for producing the accounts is
I was going to come to that in a minute.
Oh, okay.
Sorry.
Okay. Any questions on that part of it? The report then? If not, we'll move on to the next part, Joe.
Thank you. As Adrian's just mentioned, there have been a nationally agreed delay in the approval of the council's accounts, which include the pension fund accounts. So in a normal year, this meeting of the Pension Fund Committee would receive the full annual report and accounts of the Isle of Wight Council Pension Fund in advance of the Isle of Wight Council's accounts being approved at the July Audit Committee. The coronavirus pandemic situation has led to a delay or an agreed extension of that deadline so that the council accounts no longer have to be published until the 30th of November as opposed to the 31st of July. So we have taken advantage of that and are working with the council's accountants to publish the accounts for the September Audit Committee, which means that the September Pension Fund Committee will receive the full accounts and report from this pension fund. In terms of external audit, the work is substantially complete. We've had there's a slight difference in the investment values included in note 17 to the accounts, not in the bottom line results, as a result of changes in market value due to the rebalancing activities of the portfolio during October and November. This has no impact on the outturn reported. No other control issues or other matters have been raised by the auditors, and we're just waiting for final sign-off of the council's account, of the pension fund's accounts, to go into the council's accounts. I'd like to express my thanks to Joe Cook and Matthew and his team for the work that they put in finalising the accounts and getting us in such a good position for the audit. I'm happy to take any questions that members may have at this point.
Does anybody have any questions for Joe on this section? Could I just make the point on page C1 that Joe has already mentioned, the performance of the fund from January till March of this year, as you can appreciate, the upheaval in the world was dreadful, and mainly because shares, equities went down, certainly in this country, but all around the world as well. So it looks pretty disastrous at the end of March, but since then things have recovered. And in broad terms, the stocks and shares went down by 20%, but as we only have half of our investments in stocks and shares, the value of the fund went down by about 10%, and a lot of that has been recovered in the second quarter, which obviously is after the year end, but it's in the year we're in now, so it's not as disastrous as it was, and we just have to hope that the valuations continue to increase, even if it's only slightly. Any other questions for Joe, please, on that item? Are we noting that one? Right. We're at the end of item 6, the annual report and accounts. Can we just note that, please? The same procedure. If anybody has any complaints or comments, could you put your hand up or just put something on chat? If not, I will take it that you do it right. Vanessa has her hand up. Is that to approve it again? Or
no, just saying I agree to it.
Thank you, Vanessa. And everybody else is silent, so we will say that we have noted that item. Thank you very much. Right. Jo has got a problem that she's dropped out. We're just moving on to agenda item 7, which is the work plan. You're welcome to come around here if you want to.
The trouble is I've got everything set up on my computer. So
can I point out that We are physically in County Hall. I think it's happening with many of the committees. The chairman and the officer and the clerk are sitting in County Hall, and that's the. You were here at the beginning when we had a lot of technical problems, and that's why we had the donkey noises in the background, and then the birds twittering as well because of a lot of feedback. But we are in committee room 4, I think it is. 3 of us in here, socially distanced, of course, but so that we are close to the source of the IT support. So Jo is now trying to get herself back online.
I'm perched on the edge of a desk, so hopefully you can sort of see me. We're on paper D now, Chairman, is that correct?
Yeah, we're on
Okay.
Item 7, paper D, we're on.
I just wanted to draw members' attention really to the key amount of work that needs to be completed over the next 3 months. We're playing an element of catch up on the pandemic delay and catching up a lot on governance work primarily, including the completion of the annual report information. I would draw members' attention to the fact that the consultation from central government on the remedy for the McLeod case in terms of age discrimination in respect of transition arrangements has been published. It was published on the 16th of July. 68-page document for the local government pension scheme, 74-page document for the fire pension scheme, which we need to consult on and respond to by the beginning of October. So we'll be working on that. The key issue from our perspective, we think, in terms of the McLeod response, will be in terms of administration's resource rather than financial implications. We are continuing to work. There is a lot of work that needs to be done and a lot of time is being spent on that. So really just members to note, and unfortunately I think the September agenda items for this committee will be quite large, so I apologise for that in advance. But please bear with us while we're trying to get it through, and we will keep you informed as much as possible. I'm happy to take any questions that members may have on this at the moment.
Does anyone have any questions or comments for Jo, please? This is on paper D. Okay, in which case we will move on to item 8, which is the investment and funding position overview. And we'll get a report on this from Jo, Jo Thistlewood, our technical finance manager, but also we welcome into active membership of the meeting at this stage Emma Garrett from Hymans Robertson, who is listening in and joining in with us all the way from Glasgow this morning. So welcome again, Emma. Thank you for joining us. And I'll leave Jo to start off on this item. So we're paper E1 and E2.
So thank you, Chairman. We'll start off on paper E1, which is just simply a summary of the change in market value from December 2019 and March 2020, and the unaudited value as at the 30th of June. So you'll see at the 31st of December, the fund was worth £655 million, and at year end, it was down to £568 million, so quite a significant fall off as a result of COVID-19. As at the 30th of June, the market value has increased again back up to 639 million as of yesterday, the audited value. So we've recovered a lot of the areas where market value slumped, and we're back in a position where we were. The good thing about this is, although to remember, the pension fund is a long-term investor, and so therefore short-term pandemic crises such as this will not have a significant impact on the benefits payable or the future performance of the fund. The valuation activity that was undertaken at the 31st of March 2019 included some worst case scenario analyses, which would demonstrate that our funding strategy and our current investment strategy still remain fit for purpose, even with this significant dropout in market value at year end. Emma and Hymans have presented at paper E2 a summary of the overall market performance up to the end of the first quarter of 2020-21, because it was too early at the stage of presentation to have a formal quarterly performance report. But Emma will now give a more detailed explanation of where we are following the quarter end. Emma, to you.
Thanks, Jo. Can everyone hear me okay? Great. As Jo said, Q1 was very turbulent, not only for equity markets, but most risky markets. The total fund value fell by around about 13% over Q1, but as Jo noted, has bounced back considerably, around about 12% to date. So has lost a vast amount of the ground. It gained back a lot of the ground that was lost over Q1. How that impacted on your funding level as well. You remember that you've got your assets moving up and down, but you also have your liabilities moving up and down. And as assets fell, your liabilities also increased in value. So we saw a lot of volatility in your funding position over that period. In the middle of February, you were actually more than 100% funded. You were sitting at around about 102% funded on an estimate basis. That dropped in mid-March to around about 80%, but is now back up to about 95%. And at 95% funded, we consider you in that fully funded corridor. Your funding level will bounce about day on day, but you're getting back close to that steady state 100% funded position. Markets have rallied over Q2 quite considerably, and this is not necessarily down to the outlook for markets, but more to do with the unprecedented level of government support in all developed markets. Governments all around the world are pumping money into the economy in the form of loans and stimulus and trying to really recover the economic activity and global growth that we've been subject to for this year. In Q1, global equities did fall by around about 25%. Now, UK equities haven't come back so strongly as the rest of the world. Around about 10% has bounced back. So your UK equities are still sitting considerably lower than what they were at the start of Q1. Global equities have, however, bounced back quite considerably and have gained back all of the ground it lost in Q1, and this has been dominated by the US. They have a high concentration of technology stocks, which have done really well, your Facebooks and your Amazons, etc., during this period, whereas the UK have a much higher concentration to financials and oil and gas, which have suffered in this environment. So not unexpected to see countries like the US with such a huge allocation to technology booming in an environment such as this one. You've got a diversified growth holding as well, which has been a bit of a mixture of all of the asset markets, as you would expect. It did fall, but not as much to the extent of equity markets, and also has rebounded about 8% back to the quarter. So has made up a lot of the ground that also fell in Q1. UK commercial property continues to fall. However, there's very little buying and selling activity within the commercial property market to properly gauge value of assets. Due to this, the valuers of property have decided to suspend valuations due to having to implement materiality clauses within their valuations. Because the market activity is so reduced, they can't make meaningful assessments of the value of the assets. And because of that, the property manager Schroders has decided to suspend dealing. They suspended dealing in March of this year, and it continues to be suspended. Now, the material uncertainty clause has been a blanket approach across the whole UK Commercial Property Board and continues to apply to a significant proportion of your property assets. However, it has been lifted for some areas such as central London offices, industrials and student accommodation. But because some of the assets you hold still have this material uncertainty over the valuations, the fund is still suspended for trading. That means that you can't currently invest and disinvest. However, we weren't planning on making any investments in or out of property. As Jo said, you're a very long-term holder of these assets. You have the ability to ride out this dip in liquidity. So whilst dealing suspension still applies, we probably will expect that to start lifting as more and more transactions can take place. Now, whilst Schroders haven't been able to purchase and sell property assets in a way that they would have before, they have still managed to perform in line with the index and have managed to secure another 2 million per annum of rental income by restructuring or implementing lease agreements during this time, even if in spite of not being able to buy or sell. In bond markets, yields have continued to fall and prices have continued to get higher. In an environment where bonds were already very expensive, they have continued to get more expensive in that flight to safety. Everybody's selling out of risk markets and piling into government bonds and corporate bonds, pushing those prices higher and reducing that yield you're getting on them. The extensive government stimulus as well, bond buying programs have further increased the value of bonds and reduced that yield, which impacts on the fund's liabilities. The liabilities are valued using that yield, and the smaller that yield, the higher your liabilities look. However, as your liabilities have increased, your assets have managed to keep pace over this quarter, which is why you're still in that close to 100% funding position. In Joe's paper of the valuations paper E1, you'll see that because of the rally in global equities, the fund is now sitting at around 36.6% total weighting in just global equities versus its strategic benchmark of 32.5%. Now, this is a bit higher than we would normally allow tolerance for. It's out with the ranges. Usually we want to try and keep the fund within its asset allocation proportions. If anything moves too far above or too far below, we'll usually take corrective action. So we are recommending that you do a little bit of rebalancing. Capture the gains you've had in these equity markets, walk away from the table and put it into one of your underweight positions. Now, you're quite limited here, given that we'll talk about later as part of the strategy review, we will want to reduce your exposure to UK equities. Property you can't get into just now anyway. So really we'll look up to top up the underweight position to your bond assets. Probably not the full overweight amount, just 2% out of global equities and into your bond portfolio, bringing your underweight to bonds back up into a tolerable level and bringing your global equities back down. It's just a way of de-risking the fund, capturing the gains and reducing the risk that you hold within your total funds, bringing it back in line with the strategic asset allocation, which we'll talk about in a little bit more detail. But that's really the only point that I wanted to get agreement on. So, Joe, I don't know whether you want to maybe take a vote via the screens for people's hands, perhaps. But that's a summary of the stock market, the equity market, and the bond market over Q2. Everything is coming back up, but the risk still isn't gone. The support that has been provided by governments is really what's driven markets over Q2. The outcome of coronavirus and the impact that it will have on companies throughout the globe are yet to fully play out. So we are still cautious about running too much risk within the portfolio, kind of further justifying why we want to bring it back in line with your strategic target.
Sorry, Emma, I've just come back in after having lost all of my connections. I could still hear you, but would you be able to just reiterate what the recommendation was in terms of rebalancing, please?
So the recommendation to rebalance is to reduce the overweight position relative to strategic benchmark for global equities and top up the underweight allocation to your bond portfolio. Considering the positions and where you are within your tolerance ranges, we're recommending 2% out of global equities and 2% into your bond portfolio.
Are members happy to take that as the recommendation, please? Could I think we need to do a named vote on that one. We'll need a proposer in a second.
Questions first.
I have a question, please.
Okay,
I think Steve had a question in the chat bar.
It's Vanessa. May I ask a question?
Steve Milford first and then you, Vanessa, please.
Right.
Okay, thanks, Chair. Just a couple of questions. I think you came back a bit on it towards the end, but you start off by saying that the pandemic was a short-term position. Clearly, it will have longer-term effects, even if not as drastic as the current ones. And also you refer to the government funding, but clearly that again is very short term and can't continue, and there must be some longer term payback, as it were, to the current expenditure. So I guess you need to kind of factor all those things in, and I'm sure you are. And a very specific question on how we physically reduce the global equities position. Do we just say to the investment managers, you've got to sell X amount, or do we steer them in any way to say, we think you should sell assets in A, B and C or any particular companies, or do we just say, here's an amount you need to reduce the position by? Thank you.
Emma, do you want to answer that one first?
Yeah, Steve, very valid points in terms of the government stimulus isn't going to last forever, and the true outcome of the impact of the virus is yet to play out. We're still very cautious. The furlough scheme within the UK as well will only last so long, and those companies that were already on a shaky peg coming into the virus are unlikely to survive once the stimulus is pulled away. That's the same with rental incomes in your property portfolio. There's been a lot of measures put in place to either delay rental income or to reduce rental income in the short term, but when these companies are back to paying full rental amounts, the rental income on your property portfolio is likely to be impacted, and that is one of the reasons why we don't want to run any more risk than you currently need to. So further to the point for de-risking. And when it comes to actually doing the transition, taking money out of global equities and putting them into bonds, we instruct the investment managers, and they usually take a pro rata slice. So take a slice of assets right across your global equity portfolio. You're in a pooled fund, so you're not the only investor in there. They hold a lot more than just the Isle of Wight assets, and usually they have good enough liquidity just to take a pro rata slice out, and then the money is given to the bond investors, who then will choose how to invest that across the portfolio, but again, usually pro rata to what is existing.
Steve, are you happy with that? Right, thank you very much. So next we have Vanessa, and then Debbie would like to ask a question after that. So Vanessa, please.
Yes, looking at the Majority figures, to me this just doesn't make sense. The discrepancy between what they had and what we now have, I just do not understand why. At the last meeting, I know one or two other members thought that Majorgy's performance was not good, and to me this looks, I won't say appalling, but I just do not understand why we have so much money with them when they seem not to perform at all. Thank you.
That's a worthy point to note, Vanessa. So Majedi are your UK equity mandates, which have suffered much worse than global markets for a variety of reasons. And as part of the strategy review that we'll go on to talk about later, we are making a recommendation to reduce your allocation to both UK equities and Majedi as a mandate. There are some other reasons that Majedi have performed worse than your other global mandate, and that's to do with style and the type of style of investment that they have. They tend to take quite a contrarian approach to investing, buying things when they're low and selling them when they're high, in contrast to how the rest of the market is moving. So not unusual for periods of time for the mandate to underperform traditional market cap equities. However, we appreciate that performance hasn't been good for a considerable period of time. UK equities aren't looking too attractive. They have suffered and haven't rebounded as much as the global allocation, and you are significantly overweight to UK equities compared to the global index as a whole, and we will look to reduce that as part of a more balanced portfolio. So very valid. Hold that thought, and we'll come back with a recommendation as part of the strategy review.
Okay, Vanessa, we will be looking at this again in the confidential part of the agenda as well later on.
Thank you.
Okay, right, so we'll go over to Debbie next, please.
Thank you, Chair. I'd just like to start by saying, as a new member of the Pension Fund Committee, I'd like to thank Emma for giving such a clear, concise and easily understandable, certainly for me, resume. I have two questions really. As has already been mentioned, we are a long-term investor. So I think it's certainly from my perspective, it's very important to keep that in mind in these unusual times. And I am reassured by the fact that we have recovered to what is considered to be a fully funded position. I think you said, Emma, that our current position is 13% down on what our pre-COVID position was. Is that correct?
That was at the end of Q1. You're back up 12% of that 13. So your overall assets are just down around about 1 or 2% since the start of the year. But your liabilities have also increased a little bit. So there's the two things at play.
That's very reassuring. I mean, I don't know if it's valid to ask how other pension funds have performed, so that we actually have some kind of comparison. But I think, yes, that's certainly reassuring. My other question is that I understand the need for rebalancing, but as Emma, you alluded to earlier, bonds at the moment, prices have risen because obviously because of the level of risk, which is lower than a lot of other investments, because it's of supply and demand. So presumably we will actually be effectively getting less bang for our buck in terms of bonds. I know we're looking at the long-term position, and I understand the need for rebalancing and pulling out of UK equities, but is a 2% certainly in the medium term? That's your recommendation. What effect are you anticipating that will have on the fund as a whole?
So a couple of points there. Yes, bonds are expensive just now relative to history, but that's not to say they can't continue to get more expensive. People have been saying for years now that yields can't get any lower and prices can't get any higher, yet it continues to happen. And in an environment where the Bank of England have even put out that they're considering negative interest rates means that there is still scope for bonds to increase further. So kind of hedge your bets by not taking out your full overweight position, but putting half back into bonds sort of averages out and mitigates that risk should they increase or fall. And what you've got to remember for a pension scheme is that it's not necessarily about the absolute value, it's about how your assets move in line with your liabilities. And your liabilities tend to move very in line with bond prices. So even if bond prices were to fall again or to rise again, your liabilities usually match the type of movement that happens. So it's a bit more of a hedging asset than it is for an out and out performance asset. So still comfortable going into bonds as a whole. The 2% means that you have 2% less in equities in a portfolio where you have quite a lot. If we were to see markets sell off again like we did in Q1, which isn't an unrealistic expectation given when support is pulled back towards the end of the year, then you are going to perhaps lose less money than you might have if you have that overweight position to equities. Now, 2% isn't a huge amount, but it's still better. If it saves your funding level 3% in the long run over the short term, then it's still worth doing and pulling back that risk into the tolerance. It's just good practice for running your investment strategy as well, not letting the positions run away from themselves as they respond to market movements.
Thanks, Emma. And I assume that is still in line with our sort of ethical policy.
So this is still
pulling out of UK equities.
Yeah, still in line with your ethical policy. You don't have any explicit ethical considerations in any of your mandates, which we'll talk about later as part of the strategy review. So moving from one of your existing managers to another one of your existing managers doesn't change your responsible investment beliefs and or the way that it is ethically invested.
That's excellent. Thank you very much, Emma. Thank you, Chair.
Okay, thank you, Debbie. Has anybody else wish to say stuff? Joe, I think you wanted to come in next.
Yeah, just to kind of pick up on what Debbie was saying in terms of how that fits with our long-term strategy, the rebalancing. This is an immediate action that we can do to bring ourselves back into line with our existing investment strategy. The work that we're going to we're considering at the moment, and we'll move into on the next part of the agenda, is looking at our longer term investment strategy. So this is kind of the immediate phase to bring us in line with what we've got at the moment, in advance of us reviewing our longer term investment strategy as to how we bring it forward the remaining future, if you see what I mean. So so it's an immediate action to bring us into balance whilst we start the more detailed work going forward. So I think hopefully that's clear. So in terms of then, members, the recommendation that we need to take a vote on at this point, I think, is that the fund reduce its allocation or reduce its overweight position with global equities by 2% and reinvest that money into underweight bond portfolio. Is that right, Emma?
That's correct, yes.
Okay. So I think we need to propose and a seconder for that, please.
Right, so I will propose that. Barry is seconding. You seconded, I think. And I will ask the clerk to do a roll call for taking the vote, please. Can you switch your microphones on when you're responding? Barry?
Yeah, support.
Councillor Andre.
For.
Councillor Brady.
For.
Councillor Churchman.
For.
Councillor Garrett.
For.
And Councillor Axford.
For.
Unanimous, Chairman.
That's been passed. Thank you, everybody. Thank you, Emma. Can I just go off a little bit of a tangent for one moment? This is to do with property. Notice that the pension fund invests in property on a completely separate item. You know, last year or the year before, the Isle of Wight Council decided to invest in property as part of their commercial activity. Originally, there was a allocation of about 100 million, which was going to be borrowed and then invested in property. And then, Paul, we don't want to see your knees, thank you. So we had 100 million available, 35 million has been invested, and that is completely separate from the Isle of Wight pension fund. It has no effect on the pension fund at all. It's just an unfortunate coincidence that the amount of money is almost exactly the same, because we've got 35 million in property in the Isle of Wight pension fund as well. But please make sure that those are treated as two separate items in your mind. Now we've completed item 8. Now we are planning to go into exclusion of the public and press. This is a bit complicated, and I'll get Megan to explain it in a minute. I will read it out first because I will remind you all this is a public meeting and members of the public are able to watch what's going on up to now. So we're now going to consider passing a resolution that the public and press be excluded from the meeting or agenda items 10 and 11 on the grounds that there is likely to be disclosure of the exempt information as defined in paragraphs 3, part 1 of Schedule 12A of the Act, and in all the circumstances of the case, the public interest in maintaining the exemption outweighs the public interest in disclosing the information. So we have to propose and second it, and then, as I say, we will do a roll call vote. So I will propose that. Could I have a seconder, please? Paul Brading, seconded. So could I ask the clerk to do a name vote, please?
Yes, Councillor Abraham.
For.
Councillor Andre.
For the resolution.
Councillor Brady.
For.
Councillor Churchman.
For.
Councillor Garrett.
For.
And Councillor Axford.
For.
It's unanimous, Chairman.
That's unanimous, so that is passed. And now I will ask Megan to explain what on earth we're going to do. Over to you, Megan.
Okay, because we've passed this resolution, I'll now circulate a separate invite for the confidential session, which you should receive.
So
So if you bear with me, I have just sent over a separate meeting invite for a confidential session that is not viewable by the public or press. If you could just confirm, if I could just see some thumbs up, if you've confirmed that you've received that. Yeah, I'm seeing some thumbs up. So if we wanted to go and switch over into that meeting now, this meeting will be paused. I've also noted that Councillor Brading is requesting a 5-minute comfort break. So I don't know if during this switchover